Hey, this is a really exciting thing. You're going to hear a lot of people buzzing about the fact that 100% bonus depreciation is back. It's back until 2029 after being phased out over the past few years. Savvy real estate investors understand it's not just what you earn, it's also what you keep. If we're not mindful of our largest expenses, we may not be getting the same returns that we've been looking for, or we might not be able to maximize or get as high returns if we're not being mindful of tax situations.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
All right, Secrets to Abundant Living podcast community, hello. Welcome to the second half of 2025. Can you believe it? Half of the year is over. And wow, time is just flying by. It is July 5th, so it's the day after July 4th. I hope you all had a wonderful 4th of July celebration. I had some great time with my cousins and their children at a parade. They're growing up so fast. I can't believe it. I actually found a picture of my cousin and I 30 years ago at that same parade. Whew, time goes by fast, but I hope you all enjoyed yourselves. For those who don't know me, I should probably introduce myself, right? My name is Amy Sylvis. I am the founder and CEO of Sylvis Capital. And we do some pretty cool things here. I mean, at Sylvis Capital, we go ahead and we connect investors to hands-off investment opportunities so that they can get exposure in their portfolio to real estate without the daily hassles of tenants, termites, and toilets. And here at the podcast, we believe that there's so much to life more than just money that can bring us abundance, but hands-off income can be a vehicle to get us to this abundance destination where we can do what we want, when we want, where we want, with whom we want, for however long we want. So we use these episodes, the solo episodes, to talk about this vehicle, to talk about this hands-off income vehicle. And we invite you to learn something new during this podcast episode. And hey, while we're at it, do me a favor. If you already haven't written a review or rated us on YouTube, Spotify, Apple Podcasts, please do so. It helps the show so much. We pour in a lot of time and effort in hopes to add value to you. And a great way to support the podcast in kind is to rate and review us. So thank you so much for that in advance. So we had some big news yesterday in the real estate space that I wanted to share with you all, break this down, and talk about why it matters. Well, why it matters to me and why it could matter to you as well. So this is not politics. I'm not talking about politics. I'm not talking about whether I supported or didn't support Trump and the big, beautiful bill. But the law of the land now is the big, beautiful bill. And with the passage of that law just yesterday, July 4th, came 100% bonus depreciation is back. So we're going to talk a bit about what that is, how that applies to real estate investors, why that matters, and why that could be a great thing for your personal portfolio. It's a great thing for mine. So I'm going to fill you all in the inside scoop there. So you may be saying, oh my gosh, Amy, taxes, really? This is what you're excited about? This is what we're going to talk about today? Hey, saving money is amazing. Taxes are, for most of us, our single largest expense. So if we can reduce our taxes, we can actually increase our wealth and use that wealth to increase more abundance in our life. So I think this is a very exciting topic. I think you should be excited about it. We're going to make it as entertaining and interesting as possible, but just bear with me. So in commercial real estate, the IRS allows us to take this thing called depreciation. And it's essentially a line item expense where it takes into account the decreased usefulness of certain items over time. Think appliances. the appliance you bought 10 years ago doesn't have as long of a useful life as the appliance you bought yesterday. And so the IRS allows us as commercial real estate investors to take this less useful life into account via this thing called depreciation. Now, before I go any further, I do need to let you all know I am not a CPA. I'm not a tax professional. I'm simply giving education, not any sort of investment advice. And I'm talking about what I do. I'm not telling you all what to do. You need to make sure to consult with a tax professional, ideally someone that specializes in real estate, not just any tax professional, but one that specializes in real estate if any of this, applies to you or if you plan on using it in any way. So I just want to throw that out there because this is just educational purposes only, not investment advice. I'm not a CPA. I don't play one on TV, but I do have a lot of real estate experience, especially in this topic. So I'm just talking a bit about what we do at Sylvis Capital. Okay. So this depreciation essentially decreases as a line item. It shows a loss on paper, not an actual loss, but a loss on paper. And that loss can be used to offset things like income, like capital gains. So we'll get into kind of how this can be used. Again, not financial advice, but how I personally use it, how I've used it before, just as education and sharing. But here's the deal. Depreciation, that amount that we can deduct when we purchase a property off of capital gains, off of our personal income, which really depends, again, on our personal circumstances. But that overall arching theme of depreciation, how it can be used, well, the 2017 Jobs Act allowed us for a couple years to take 100% of that depreciation in year one right up front. And then it was slowly phased out. So year over year, it went from 80% to 60% to 40%, and then it was set to completely expire. So I'm going to show you an example of why 100% bonus depreciation being back is such a big deal and the difference that it makes just from regular straight line depreciation. So hang in there. This is going to be a quick one, but it's an important one, again, just for your background information for you to understand what all this can look like. So let's say, for example, I'm going to use me. Let's say I buy $1 million commercial property, $1 million. I buy it. I own all of it. We're going to do all this very round numbers, keep it very simple. So I own a commercial real estate property that I purchased for $1 million. Okay. So from there, what we're going to do is we're going to do what's called the cost segregation study. And this essentially identifies, per IRS rules, how much the land is valued as a part of that $1 million and how much the property on top of the land is valued. And then furthermore, the cost seg study is going to go ahead and understand the different items in the real estate that can be depreciated and at what schedule. So I'm not going to bore you with the extensive details, but I will say the person that we use, his name is Yonah Weiss. If you don't know him, you can find him on LinkedIn. I'll put the link in the show notes, but he is the CostSegKing. He has appeared on this podcast before. Not only is he amazing at doing cost segregation, but I think he's an incredible human being. We have a lot of shared values about the world, about how to run business. So just a really, really cool guy. So we use Yonah Weiss at Madison Specs for our cost segregation. So we buy the property and then we understand, obviously we buy it for $1 million. And then we do the cost segregation study and we understand that the amount of property, of land, the land value is $150,000. So the land value is $150,000 in this hypothetical example. And so land cannot be depreciated. That's just part of what it is. It doesn't lose value over time because it doesn't have a useful life. So we detract that from the $1 million. So now we're left at $850,000, which is the real property on top of that land. So the walls, the floors, the lights, the appliances, all of those things, those can be used and depreciated. Again, this is just a high level example. So normally everything on top of the land in the real estate would be depreciated at a 39-year schedule. So that means every year we can, divide the useful life of something. Again, this is a very high level. There are some intricacies, but we're just using this oversimplification as an example. So we'll divide the useful life by 39 years, and then we can take that every year, that amount, and use that as that depreciation value or that expense kind of as a loss on paper, not an actual loss. So let's just say in this example, if we were to do the regular depreciation, not the 100% bonus depreciation, but the regular depreciation, it would give us $30,000 per year in tax savings. So that's nice. I mean, $30,000 per year in tax savings is huge. So that could be something, again, that's not the savings on taxes. That would be $30,000 that we could use to offset normal income, offset capital gains, depending upon your personal situation. We'll get into that. But just think, okay, $30,000 a year, that could be quite nice. Well, with a bonus depreciation, we get to take some of that savings over that 39-year period of time and accelerate it forward and bring that into year one. So let's just continue with this example. And let's just say, not every part of the real estate property can be used for 100% bonus depreciation, but let's just say 25% of our commercial real estate building is eligible for 100% bonus depreciation. What does that mean? So 25% of the $850,000, the part that wasn't the land, but that's actually the real estate, that's $212,500. $212,500, $212,500. So contrast that with $30,000, right? $212,500 versus $30,000. We can take that $212,500 and take that as our bonus depreciation to offset capital gains, ordinary income, depending upon our personal circumstance. And we could do that all in 1 year. I mean, that's a pretty big difference there, right? 180,000 or so, just, round numbers. That's pretty nice. That's a nice gift from the IRS. So let's just say for round numbers, capital gains is 30%, just as an example. And we use that $212,500 to offset some capital gains that we were supposed to pay in that given year. If 30% is the capital gains tax, that could save us $63,750 in actual taxes that we owe to the IRS. Are you hearing me? I mean, this is huge. This is a big deal that was just passed. Massive. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. So let's review. We bought a property for $1 million. I bought a property for $1 million. We did a cost segregation study. $150,000 of that $1 million purchase is land. Land cannot be depreciated. So we have $850,000 less. And let's say, given the 39-year regular depreciation schedule, we can recognize, under ordinary circumstances, a $30,000 per year deduction in depreciation because of that straight line depreciation. Great. $30,000 is huge. But under this new law, under 100% bonus depreciation, again, as an example, let's say 25% of that $850,000 of the actual real estate qualifies for that bonus depreciation. That gives us $212,500, which is $180K around, round numbers in my head, more than that straight line 39-year depreciation. that could result in substantial tax savings. So that's why we are so excited because, hello, who doesn't want to pay less in taxes? I still never met, despite everyone's virtue signaling, I still never met anyone who's paid or written a larger check to the IRS than what they owe. If you've met someone, let me know, but I still have not seen it. So how can this depreciation impact all of us? How could it apply to all of us? Well, so again, this is where I'm going to repeat ad nauseum. I am not a CPA. I'm not a tax professional. In my case, what I have seen, again, sharing my personal circumstance, there are two different ways that this depreciation can be applied. Some of it is to other income like capital gains or other passive income, or to personal income. Now, how do you get to decide? Well, if you have real estate professional status, and that is a definition by the IRS, then if you meet that real estate professional status qualification, or if your spouse does, you may be able to take those depreciation loss and use it to offset ordinary income. Look, that's not going to apply to most people. It applies to me because I do real estate full time, and there's a whole bunch of criteria that you need to take a look at. So again, this is why we have you consult with a CPA who specializes in real estate. But gosh, if I don't qualify for real estate professional status, hey, that's fine. That is not a problem. I can still, if I'm not a real estate professional, I've been able to take that depreciation, that loss on paper, and use it against capital gains. So again, not financial advice. I am not a tax professional. I'm not telling you what to do. I'm simply sharing what I've been able to do with that loss on paper from depreciation from investing in real estate. That's a big deal. If I'm able to offset capital gains on investments, that increases my returns quite substantially. And I know the capital gains tax rate can vary, so I'm not going to go in depth here about what those numbers could look like. But again, who doesn't want to pay less in taxes? I've yet to meet anyone. This is all a big game changer. And you know, I have to be careful on these podcasts, again, because I am not a CPA or a tax professional, but we can talk about how some people do what's called a lazy 1031 exchange. You may have heard of a 1031 exchange where you identify a property, you use an intermediary, you roll funds over from the sale of a real estate venture, you roll it into a like-kind exchange, and you can defer capital gains that way. Well, some people, myself included, instead of doing that, just take proceeds from a real estate transaction and invest in another property and use the depreciation to offset the capital gains. Hey, is it one-to-one? Is it perfect? Is it, the exact same thing as a 1031? No, but it has been for me a helpful thing to do this colloquial lazy 1031 exchange because I don't have to identify properties. I don't have a time period. I have more flexibility. And with 100% bonus depreciation coming back, my goodness, it can be a nice way to defer those taxes. And I use that word defer strategically because there is depreciation recapture. And I think that's really important. Again, this is not an in-depth conversation with your personal CPA or your personal tax professional. I'm giving education and introducing ideas for you to dive deeper with your professional. But yes, it is important on the other end, just like a 1031 exchange, to understand what happens with the depreciation once you sell that property that you've utilized. You've done a CostSeg study, you've done depreciation, you've taken advantage of that to offset other income in your portfolio. And when you sell the property, then what happens? There is depreciation recapture. What that looks like, how you can strategically use it outside of this scope of this podcast, but again, something that you can talk to your tax professional about. Hey, this is a really exciting thing. You're going to hear a lot of people buzzing about the fact that 100% bonus depreciation is back. It's back until 2029 after being phased out over the past few years. So we are really excited. And hey, savvy real estate investors understand it's not just what you earn, it's also what you keep. So if we're not mindful of our largest expenses, we may not be getting the same returns that we've been looking for, or we might not be able to maximize or get as high returns if we're not being mindful of tax situations. So One last question that I get often from investors is, hey, if I'm passively investing in a real estate syndication, you may recognize someone who's talking to you right now who does real estate syndications. If you passively invest alongside of me, in one of our large commercial real estate projects, do you get depreciation? The answer is yes, absolutely you do. Yeah. So we tend to have an estimate at the very beginning from our dear cost segregation folks. They can give us a little bit of an approximation of what the depreciation might be. We don't know until we buy the property, but we can give our investors kind of an approximation, and they can participate as passive investors. So not only are they not finding the property, identifying the market, or doing the day-to-day operations, they get the tax benefits as well. So exciting, y'all. So if you have further questions, again, reach out to a real estate specialized CPA. I joke with people, if you're seeing just a regular CPA, that's fine, but I see that they're not always on top of the latest information. It's kind of like being pregnant and going to a foot doctor. Hey, a foot doctor is a doctor. Well, I think so. They're going to be able to help you, but it's not going to be the same as seeing an obstetrician, a specialist in delivering babies. Kind of the same with your taxes, CPA. If you go to a real estate specialized CPA, they're going to be able to have more knowledge and help you rather than just kind of the person that's been doing your regular W-2 taxes for 20 years. No shade to them. Specialization just matters, right? That's just how the world works. So, but yeah, go to them. And then, hey, if you're interested, email us because we may have some real estate investment opportunities. We don't like the tax tail wag the dog. I don't. So we don't invest. I don't invest just to get tax benefits, but it can be a nice cherry on top depending upon my strategy and my time horizon and kind of what other income I have coming in. So you can email us at info@sylviscapital.com and we'll be happy to get you in touch with any opportunities that we may have. That is an exciting one. Husband Joel did not turn on the air conditioner soon enough, so it's already quite toasty in our house right now, but we got through it with the still looking somewhat put together here on the video, right? Well, thanks for joining us for this really exciting update. We just could not be more thrilled to share with you the great news for our industry. And, I'm planning on taking advantage of this in my portfolio. I don't pay more taxes than I ever have to by law. So if that's you as well, dig into the topic more, see if it's right for you. It's not going to be right for everybody, but as always, the education is the powerful part, right? You can empower yourself. No one's going to do this for you. So keep diving in and we're here to help if we can. Let's try that again. We're here to help and we will do so to the best of our ability and then make sure you get the right professionals involved as well. All right, everyone, here's wishing you a very abundant week. And we can't wait to bring you more exciting news soon. We'll talk to you soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.